Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck. And this week, I'm joined by Zach's stock strategist, Maddie Johnson, who is also the editor of the Income Investor Portfolio, to talk about our favorite topic, the retailers. But this is a different environment than we normally have had when we've discussed the retailers on this podcast. The consumer is still healthy. They've got lots of cash in hand. And look at unemployment. It's at 3.6% as of March 2022, with many states at all-time lows. So the states have just started to put out their March data. And I noticed some of them are kind of interesting. We've known that the West has been real hot with its job market, like Idaho and some of those states. Montana is the lowest. It's at 2.3% unemployment now. That is totally full employment. Basically, everybody who wants a job can get a job. That's the fourth lowest in the nation. But look at Wisconsin. They just reported their lowest ever at 2.8%. So some of these states, there's jobs galore. And when there's jobs galore, you tend to spend. You feel good. You can know that if you don't like your job, you can go get a different one. People are getting pay raises when they're switching jobs. Even wages are on the rise. So that's all a very strong thing for the retailers. But with this little thing called inflation, it's biting this year in 2022. I go to the pump, I'm filling up my car, and it's a big hit at the pump. Also at the grocery store, food prices have risen. Even just eating out in restaurants, it seems like all the restaurants are raising prices. Some things aren't being hit as bad. I don't feel like clothing or even shoes have seen real huge increases at all, but we are spending more on the things that we do need, like every day, like food. And so that's causing a little bit of a bummer in this great job market. And so some analysts are thinking that the consumer is going to pull back here as we head into the summer. But what will they pull back on? Which retail stocks will still be winners? Which could still be losers in this kind of environment? So, Maddie, there's a lot going on.
There is a lot going on. So like when you reached out about, me coming on today, which I'm very excited to do because, I love shopping and I love retail. Yeah. And I liked the dictionary spin on like what we'll talk about, what kind of stocks we'll talk about. And as I was like thinking about today's episode and prepping for it, I think the big question for apparel retailers and even let's like focus on apparel. Okay. So I think I feel like we still don't know how many events, weddings, parties, vacations were postponed for this year. Yeah. And like another question on top of that is how many people are still going to go to all of these things and then buy all new clothes for these things, or clothes, shoes, accessories, luggage, what have you. So yeah. I still think like there's like going to be pent up demand for like very specific like apparel sectors. Maybe that's wedding dresses, wedding guest dresses, maid of honor dresses, bridesmaid dresses, new suits for guys for like these special events. And one stock I feel benefiting from that is Revolve Group. Okay. Ticker is RVLV. I was just reading that like dresses are one of their core products. And in Q4 of last year, 2021, the dress like segment grew 140% year over year. So I feel like that is like a tailwind that's going to help Revolve, which is like an hip e-commerce platform that's like known for partnering with influencers. They have this huge Revolve Fest at Coachella every year, but apparently this year, this is definitely an aside, it was like a fire festival level disaster. I don't know if you saw that headline.
No, I didn't see this.
was like a total mess. It's kind of hilarious reading about it, just like how like watching like the Firefest documentaries for your jaw just dropped at like the audacity of the planners.
Is that bad though? Is that bad PR for Revolve, or is all PR good PR, even if it's something kind of crazy? I mean, we are talking about it.
We are, and like think of like the guy who planned Firefest. I don't even know what his name is, like Billy something. Like he's still out there in like the hedge fund, like investing VC world. Like I'm sure like still able to get money from certain investors. Anyways, so that's what like I was like thinking about for today is like how much, because it is only April. Wedding season really hasn't started.
Right.
Obviously, like a lot of people have gone on vacation for spring break, like these past 2 months, but summer vacations are still well ahead of us. So it's just like I still feel like we don't know how much demand there's going to be. But my guess is there still is going to be a lot this year, despite inflation.
Yeah. I did see some stats that this is expected to be a record year for weddings because of all the delays. And then some people actually got married, maybe just officially through their state during COVID, but now they're having the party. So you have to add those into it. And I saw an article that said some venues are literally booked 7 days a week. So they're even having weddings on Mondays.
Wow.
Because it's so much demand and they can't keep up. And some are just, even the wedding planners are like overwhelmed and they can't get, because of supply chain issues, they can't get in like certain things, that they used to get in, like, stuff in vases on the tables and stuff like that. And they've had to change course and like figure out alternatives to some things. So the industry is in somewhat of a cast, but it's like too much almost. But that means think about all the guests, who are going to be going to this. And I don't know about you, but if I was going to a wedding this summer, I have one scheduled for the fall. And yes, I do want to buy a new dress for it.
Oh yeah. My college best friend is getting married at the end of July. And did I buy a brand new dress and brand new shoes? You bet I did.
Yeah, that makes sense. Like we all want to be out there again, even though last year was supposedly the reopen. This year really is the reopen, I feel. So what about something like Rent the Runway? If we're all going to be going to these kind of, bigger event type of things, could Rent the Runway, make a resurgence? They've had a bit of a rocky start here as a public company. Well, their share price has at least. And so I don't know. I just saw their CEO in an interview and she said that demand, is still up there because of all of these events that are going to be going on.
Yeah, that's a good mention of Rent the Runway. I'm looking at their chart right now, and it is not pretty.
52-week high, 477, and they got as low as $4.37. They're at almost $6 right now on April 19th, 2022, when we're talking about them. So they're still way down there. Because
but I think with Rent the Runway and also Stitch Fix, that's ticker SFIX. A lot of I feel like their core revenue comes from their subscriptions.
Right.
But I don't know I know with Stitch Fix, I actually used to own the stock in my personal portfolio and I sold it painfully because it just wasn't able to get out of the downward rut. But I feel like there's like a cap. I don't see a lot of growth for these types of subscription services moving forward. And I know that was a key issue with Stitch Fix. Isn't the subscription model also at risk in an inflationary environment? So we just heard from someone over in the UK saying that all these people over there are canceling various streaming services right now because they can, right? Things are kind of tight. And
food prices are surging or natural gas prices to heat your house. Well, sorry, Disney Plus, there's nothing on there I want to see right now. You're going out the door. I'm canceling you. So won't the same thing kind of happen with the Stitch Fix? Do I have to have that subscription? No, I don't.
Exactly. And like, do I have to spend $100 a month to get 4 new pieces, or 4 with Rent the Runway? Their subscription model is like you pay, let's say $100. I'm not sure the correct number. And you get a set number of used clothing items coming to you every month. They're not even new at Rent the Runway. It is used clothing. Then if you like it enough, you have the option to buy it at a discount. But are enough people doing that? Whereas Stitch Fix, you do get like a curated box of clothes and accessories. Right. It's all brand new stuff.
Right.
But it's not cheap, right? Like if you know, canceling some like Netflix or HBO Max, that's doable. So why wouldn't people then want to, you know, cancel $100 a month subscription?
Right. So yeah, I'm not like a big fan of those in this kind of inflationary environment, but I guess we're going to find out. Stitch Fix, by the way, those shares, 52-week high, $69.20, 52-week low, $8.75. So it's basically almost wiped out everything. It's now trading at about $10.40 here on April 19th, 2022. So it's just a little bit off the lows, but not much. It's basically trading near those lows. So maybe everybody, the street is thinking what we're thinking, that the subscription model on some of these retailers is not going to be the good model with inflation, but we'll see. Yeah.
We'll see.
So switching, we'll stay on apparel, but switching to like some of the bigger names. So I saw an upgrade by an analyst on Lululemon, ticker LULU. We've talked about it many times on the show because it is kind of the gold standard for apparel, both men's and women's. They have a big men's business now. And a lot of people, you might think, oh, Lulu, who's going to need to buy those clothes if there's inflationary pressures, right? But this analyst thinks that you still will, because it's still the premium of the yoga pants and just their other products. And people still are working. They still do have their jobs, all of that. So they're not going to give up their Lululemon. And this kind of reminds me a little bit of 2008, 2009. So Lulu was publicly traded during the Great Recession. And all I heard was endless analysis that, oh, the stock is going to get hammered. Their business model is going to get hammered because who's buying $100 yoga pants during the Great Recession? But even in a recession like that, people did, and their sales held up. And it was one of the winning stocks during the turnaround in 2009, 2010. So I still feel like you can't count Lulu out, because everybody is working and they will keep loyal to some of their brands. Now, I did look at what the stock did. At one point, it was off 30%. And I thought of you because I remember on our last podcast, you were saying you were considering buying Lulu. And I was like, I wonder if Maddie bought any on the sale. It has bounced off those lows. And now year to date, it's actually up about 4%. And it's still trading expensive. It never got dirt cheap. So even on the 30% pullback, but it's now trading around 42 times. I think when we last talked about it, it was like 50 times or something. So it was more expensive, but Lulu, I don't know, what do you think here?
Well, so kind of like going off or expanding on like what you said, not only are people still working, but now people are, I would say more than ever since pre-pandemic, are now more comfortable going back to fitness classes and the gym and whatever that means. So not only do they want to look cute for a wedding, they want to look cute for their first
workout.
Fitness workout in like class or whatever. So, and that means spending a minimum of, let's say you buy a $98 pair of leggings, a $68 sports bra. That's a pretty penny.
Yeah,
so,
sure.
And that's just 2 things. And that's, I think, what has helped Lululemon is that their price point has always been high. It's never been cheap.
Right.
But now their price point is the standard, right? So like if I'm not paying at least $90 for a pair of leggings. Are they good leggings? Do they pass the squat test? Well, if I, do a heavy squat, will everyone in the gym see my
Right.
my bare behind?
Yeah.
No. So I think that in my presentation I gave last week about skincare, I talked about, and this was like for listeners, we do this like bi-weekly editors meeting, and every editor is in charge of presenting a very cool presentation for the rest of the team. But I talked about skincare, and I talked about this one thing. It was during the tech bubble burst of the early 2000s, and in the recession that formed after that. And Leonard Lauder, I believe that's his name, from Estee Lauder, he talked about like this lipstick phenomenon where people really wanted to keep buying and keep treating themselves during a recessionary period, these quote unquote little luxuries. So they would buy lipsticks because they were cheaper compared to other makeup products. You can get them well under $30. Today, maybe not so much, but I feel like that same logic can kind of apply to Lululemon, where in people in certain tax brackets, a little luxury is a $98 pair of leggings. Right. Or you go for a little lower, maybe it's a bike short, maybe it's a sports bra that isn't as expensive. Maybe it's like a nice pair of socks or whatever. So I think like because Lululemon as a brand is still so covetable, I agree with like that Wall Street analyst, and I do think that 2022. I mean, they actually crushed it last year, and they just like released earnings a few weeks ago.
Yeah,
absolutely, and it's just like it just doesn't seem that they can be stopped at this point.
So have you bought the stock?
I have not bought the stock.
Okay.
The general like bearishness of the market so far this year has really kind of scared me. Yeah. I'm not a risk taker with my investing. I do love a sure thing. So a stock like Lulu that was so expensive and got hit quite hard earlier this year, I was like, no, thank you. I'll wait just a little bit.
Okay. On the note, since you brought up that lipstick index thing, what about beauty right now? So obviously the biggest beauty stock, or one of them, is Ulta, ticker ULTA. I took a look at it today on April 19th, 2022, and it's busting out to new all-time highs. So that's kind of surprising because everybody assumes, most of these retailers are down on their luck, but not Ulta. Year to date now, the shares are up 3.7%. So it's wiped out its earlier losses. It did have weakness earlier in 2022. It's trading at 22 times forward. So cheaper than Lulu, about half the cost. Sure. On that basis. But I know the street is very bullish on Ulta for the reasons you just mentioned, is that it is still the lower cost items. They are going to be in demand. We are going to all these events. We're still doing Zoom calls and all this. And people are still buying the skincare and the makeup, the lipstick. Now the masks are going away almost everywhere. So we can wear the lipsticks again. And, mascara, the lashes are still super popular. And so Ulta looks like maybe the place to be right now.
Yeah. And I'm very interested to see like how their broader makeup category is going to perform this year, because as we know, skincare is very hot. It's very trendy. Yeah. Everyone has a skincare regimen now. I do. I'm sure you do. Like all my friends do. And that has impacted the makeup trends, right? You want to look as natural as possible, but still like wear like a CC cream or a tinted moisturizer or what have you. But like now with all of these events and your picture is getting taken, for me personally, if I don't wear like MAC level coverage stage makeup, like a stage foundation, you can look really washed out in pictures.
Yeah.
Especially if you're a part of a wedding party, like your face is like, it's going to be like a full on mask with all the makeup on. Right. So I'm very interested to see like how foundation's going to perform, how eyeshadow palettes, like eyeliner, blushes, bronzers, contours, all that stuff. And how like if sales will start creeping back up again.
Yeah, going into the pandemic, makeup had slowed considerably. There wasn't like a new trend. There wasn't the contouring because that had happened a couple of years before that. You had like the Kylie thing with the lips, but then that was over. And there wasn't like a driver for the makeup segment. And then the pandemic hit and it just got crushed down because we didn't need to wear it. We're all in our houses. And then we had masks on and all this stuff. So makeup just got hammered. But if that category can turn around, which I think it will inevitably turn around. There will be some new products and some new hot things. That's how it works. But when that does happen, a company like Ulta is really going to see, big gains because makeup for them is their largest category still. Yeah. It's like over 50% of their revenue is on the makeup side. So if they get that moving, it's, justifying this breakout here and a little bit of a premium. What do you think on buying something like Estee Lauder, more on the luxury side on makeup? They're the actual company, they sell in retail stores and you can buy online for Estee Lauder, but they have some of the premier brands and that stock has been on fire all throughout the pandemic, but has pulled back this year. What do you think about somebody like them on beauty?
I like Estee Lauder, right? Like they are more of like, right. They began as just Estee Lauder with like 4 core products, but now they are a like nearly like $100 billion beauty multi-conglomerate, like giant, global giant. They have really hot brands like Bobbi Brown and Clinique, MAC Cosmetics, which I mentioned before, La Mer, that very expensive
I love La Mer.
skincare company.
Who can afford that? Tell me who's not out there.
Not in this market. I will say every year, Nordstrom, they have their anniversary sale in the summer, and they have La Mer products, like certain products from that brand are on sale during this anniversary sale. Oh. And I remember, I don't know if you remember, but we were still in the office and I showed you, they had like this tub, like this massive tub, I would say like maybe like 40 ounces or 60 ounces. I don't even know if that's a lot of like the original La Mer cream. And it was price tagged at $1,200.
Oh, yeah. So for a big one. Yeah.
Yeah. Which is just like outrageous, but also, some people buy that.
Right.
But Estee Lauder, I think like, I think it kind of has gotten forgotten about because like with like the resurgence of Ulta, a company like Sephora, which is under the LVMH umbrella, which I believe you can buy shares of here in the US, but it's kind of, I don't feel like it's kind of like how in retail, like not a lot of people think of companies like G3 Apparel or PVH, where they are like massive companies with like a huge brand portfolio. So, buying into like a company like Estee Lauder or CODY Inc., which owns a ton of brands, and the Kylie and the Kim Kardashian brand, they own at least a stake in, that I think now is the time for these stocks to shine, for them to like be able to like rightfully break out, if that makes sense.
Yeah. So let's switch over to furniture, because we normally don't really cover furniture. We've covered them a couple of times over the years, but it hasn't been lately. And it's been one of the hot areas in the pandemic. All the furniture stocks soared because we all had to rush out and buy desks and new couches and just whatever for our houses. And now that's kind of cooled and the stocks have retreated now because people are worried. Do I need to buy furniture if there's all this inflation out there? Won't I pull back on that? It's kind of discretionary, really. And so there's a lot of fears around it. I personally have owned Williams & Sonoma, which is ticker WSM, for several years now. I want to say 4 to 5 years. but I just sold it last week. I'm out of there. I had a nice gain, and the stock is not holding up too well here. And I feel like it could still go lower, and I wanted to redeploy. I still love Williams and Sonoma, and I love what they're doing with the business, and their brands like West Elm is still crushing it. But I do feel on the furniture side that the housing market will slow here as the rates rise. And then the inflationary pressures, I think some people will hold off on some furniture purchases.
I agree. Like, this is like the one area of aspect that I'm just like, I like the momentum that they've seen over the past few years. I just don't think it's sustainable.
Yeah.
Especially because, like you said, mortgage rates are now like they're at 5% or above 5%. So just for that reason alone, the housing market is not going to, attract as many buyers in. So I don't know. Like, I own Ethan Allen, an income investor.
Okay.
It has just given me, I had like, it's one of those stocks where the business is solid, like actually like really solid. Right. A lot of their product is made here in the US. So when like the supply chain crisis like blew up last year, that wasn't necessarily like a huge issue for them because a lot of their supplies, they didn't have to get, shipped from around the globe. Yeah. They had it here. And their dividend is like really rock solid, nice, really juicy annual yield, but it just has not gone anywhere. It truly is like one of those stocks where no one seems to care at all about Ethan Allen and really like some of like the other furniture makers too.
That is true. It's the same with Bassett, same with Haverty. People know these names. They shop there, and the stocks are cheap. They're having record sales still. A lot of them pay dividends or even special dividends, as you mentioned, like Ethan Allen. They've got great balance sheets, but the street is just totally turned against almost all these companies right here.
What about RH? How are they doing?
Well, that stock's been cut in half. So, and then, Gary Friedman, the CEO, just had like the doom and gloom conference call because they manufacture a lot of their product in China. And so now they're facing the supply chain issues even more so than they did, last year. So that's really impacting the cost, the inflationary pressures and the costs of the containers. Gary went on about, the new contract they just entered into in March and the further increase in the costs on those containers to ship everything in. And that's hitting. They are still moving forward with launching a couple key lines because the job market is good, right? But RH is also predicated a lot on what happens with the stock market because of their wealthy clientele. They do buy more furniture when the stock market is up. So we've had, a rocky start to 2022 in the stock market, especially those big growth names. And so some of the luxury furniture buyers are kind of moving on the sidelines a bit, it seems. So RH is it's gone on sale. If you were interested in it at $700 a share, you might be real interested in it at $350. I'm kind of waiting for them to open in England. They're supposed to open RH England this year. Wow. It's a big estate outside of London that they bought. And they're renovating it.
Bougie, so
yes, and it's one of their experiences, but it's going to have the orangery and all of that stuff on the estate, and you can like picnic there and all this stuff. So I kind of want to visit it. I want to go over there and just to check it out. But
it's
they also,
like full Bridgerton vibes. They just went like they watched Bridgerton. They're like, this is what we're doing, 100%.
Exactly, 100%. So I'm excited to see what they do with that. And then they did just launch in San Francisco. So anyone who's listening in San Francisco and wants to check out what it's all about with RH, they converted the Bethlehem Steel building. It's a historic building in San Francisco along one of the piers. Literally, it's taking them like I don't even know. It was like 6 or 7 years they've been converting it. Finally, it was done. They had a big party. You can eat it on the rooftop restaurant, and the building is gorgeous. So if you're in San Francisco or the Bay Area, go over there and check it out, because I'm thinking about going there too, just to check out the restaurant, because that one is beautiful because of the historic building and what they did with it. So yeah, like they're a little more than furniture. They are the experience thing. I still own the shares in my own personal portfolio. People who follow me on Twitter know that I've owned them for many years now. I do tweet out the conference calls, so they're always interesting. But so are the Williams and Sonoma and some of the other furniture makers I've listened in on. And they're all still seeing the strong demand for the most part. But supply chain is an issue, and then just the street thinking it's peak earnings, kind of like myself. That's why I sold out Williams and Sonoma. But is it? I don't know. The street's been wrong for a while on the furniture stocks, because they said it was peak about a year ago too, but it wasn't. The sales are still there. We're still nesting. We still want to be at home. We're still buying, the bread makers and whatnot. We're still cooking at home. All the supermarket chains are saying, they're seeing very good comparable comps from last year, even further growth at the supermarkets, even with the higher prices, because people are, still at home cooking. And now if the restaurant's going to be really expensive, I maybe will stay home because that's cheaper still than eating at the restaurants. So, yeah, I don't know. It's going to be an interesting area to watch as this year goes on the retail side. So
Definitely.
Yeah. So there definitely is a lot going on, and the retailers, I do feel are a bit of a mystery here, even as we get some of these reports in, and some have been better than expected. Like even Lulu's last report, I knew it would be good because it was the holiday quarter. But they do have a big China business. So I was curious to see if, the lockdowns and restrictions from COVID over there were impacting, but it wasn't that bad. But that was a couple weeks ago. Hard to know what's happening now. But even over in China, the consumer will bounce back. We all know this from the COVID shutdowns. Like the shutdown ends, and then you do want to go back out there into the world and buy things. So that will happen in China as well. So
Absolutely.
Yeah. Okay.
And I would say just one last thing is don't sleep on the big box retailers, listeners. Costco crushing it, Target crushing it, Walmart not as hot, but like I feel like there's an opportunity there for Walmart's WMT, that's their ticker symbol, to kind of to bounce back a little bit. Each company has been really good, I would say, even over the past 5 years, of adapting to like a changing retail environment, specifically Amazon and like their impact on retail as a whole. And then just innovating, whether that's, both Walmart and Target's buy online, pick up in store. I don't know if you can do that at Costco, because that's like, I feel like that would be a major undertaking with like a wholesale buy online, pick up in store. But you can get stuff like delivered from Costco.com. And, that's just, it's kind of like what you mentioned with the supermarket, like Kroger. They have, I think each company has like a really good management team in place. And once you have that, they know how to adapt, they know how to innovate. And that's just really exciting to see for these like traditional big box retailers.
Yeah. What do you think about Amazon here? The shares have gone nowhere for about 16 months. They were actually down about 7% over the last year, the last I checked. So you haven't been getting anything. There's no dividend. They are going to split the shares this summer, and it has a new CEO in Jassy. But I don't know. And they're raising the price of Prime because of the inflation. How is that going to go? Are people going to cancel that? I don't know. Nobody's really talking about these things with Amazon and the pressures they're facing on the inflation side, and how costly it is for them to do, 2-hour shipping while gas prices are rising, wages are rising, all of this stuff.
I don't know. I don't even think this is a bold prediction, but I doubt there's going to be very few people canceling Amazon Prime.
Okay. Do you have it? Do you have Prime?
Oh yeah, I wouldn't.
Me too.
I would never not have it.
Right.
It's like, and I try to be good I try to be like good Amazon shopper and not have things delivered the next day. Like I try to do like, oh, I don't need this book for like 5 days. Sure, like get it shipped to me on Monday and it's like Wednesday now or whatever.
Yeah.
So I try to be like very conscious of the workers like having to run between all of
Are we the only ones who do that?
I
thought it was just me, but I'm always like, yes, please consolidate into one shipment. And oh yeah, I can take it 5 days from now. Like I feel bad. Like
they'll give you digital rewards. So if you want to like rent a movie or like buy a book on Kindle, like you get $1.50 off or whatever.
Right.
So because of that, but also, I mean, all of us have gotten so accustomed to free 2-day shipping that even on any other platform, if I have to pay for shipping, I'm like, do I even really want this?
Right.
Even if it's $5, like, I'm just like, well, maybe I can wait.
Right. You get like outraged if you have to pay, but we are paying through the Prime membership, but it doesn't feel the same way because it's like once a year we pay that.
Exactly. Like there's like, it's such a mentality that we've all grown into. And it's like the same thing with like being really attracted to like something that costs $9.99 or like $9.95 or something, where it's like that it's not $10. Actually, it's less than $10. So that's a deal or whatever, you know?
Yeah. So do you actually watch the videos? Do you watch Amazon Prime videos?
Oh, I have Prime Video. Yeah. Like I actually, a lot of, I use Prime Video as I like add on to it. So like I'm currently subscribed to Stars. Via Prime Video. And AMC Plus very randomly. But I really wanted to watch Mad Men from start to finish, and that's all there with like no commercial breaks. So I was like, sure, I'll pay $8.99 a month for the however many months it takes me to watch this show. And then Better Call Saul just came back on, so now I'm like, well, I guess I'm keeping it until that show's over.
So their video streaming does keep you around in the Prime membership.
For sure.
Not just me too. It's not just the free ship or the shipping, is covered and all that. It is.
I mean, if it wasn't video and if it was just like your 50-cent discount every time you go to Whole Foods, because like that's all there is with like that code, I'm like, maybe I would cancel it.
Right.
Like every time I use the code at Whole Foods, it's like you saved $1.37. I'm like, really?
Right. Yeah, that didn't really go over all that well, I feel, because if I save $2 at the Whole Foods, that's like a miracle. Using it's like a big day. I'm like, wow, $2. So yeah, I feel like they haven't really because of the food inflation as part of it, actually, they haven't been able to offer like Prime discounts on many items because of increasing prices. So, so Amazon, that'll be a big one to watch this earnings season, but all these retailers will be, because things are shifting quite dramatically here in 2022 as those mortgage rates rise, as you mentioned, and inflation keeps picking up. It was 8.4% in March. So that's not been very pleasant for most of us, even though the job market is still so good. So these are the ones to watch. And we have a long list of stocks on this show, but we had to go out with a big bang here. So let me list out all the tickers and so that you have all of those. So we talked about Revolve Group. That's the online retailer, RVLV. Then we mentioned Rent the Runway, RENT. Stitch Fix, I can never say that, it's like a tongue twister, is SFIX. S as in Sam, F as in Frank, IX as in X-ray. Then Lululemon, LULU. We had Ulta Beauty, ULTA, Estee Lauder, EL. We did mention Nordstrom's briefly. JWN is the ticker there. Louis Vuitton, is that the one we were mentioning? No, LVMH. LVMH does trade here. It's LVMUY, I think is the ticker here. Yeah. CODY, we mentioned them on the beauty side, CODY. Williams and Sonoma on furniture, WSM. Ethan Allen on furniture, ETD is the ticker there, ETD. RH is just RH. We mentioned Costco, COST, Target, TGT, Walmart, WMT, Amazon, AMZN, and we mentioned Kroger briefly there. KR is the ticker there. So that's quite a list. Do you own any of these, Maddie, in your own portfolio?
I do own Target in my personal portfolio, and I also own Target, Kroger, Ethan Allen, I mentioned, an income investor.
Okay. Yeah, we didn't even mention that part of it. There are some good dividends. Well, we kind of did with Ethan Allen, but there are some good dividends with many of these. Some don't pay anything like ULTA or LULU. Some are doing share buybacks, though, so you should check into that because that's still a benefit. But there are some good dividend yields with some of these, especially on a pullback. On this list, I do own a couple of them as well. So I did sell my Williams and Sonoma. Sorry, Williams and Sonoma, you're out of RH, I still own that one. And I own Lulu. I bought it a couple of years ago. I finally caved. I did buy Lulu a couple of years ago. And Ulta Beauty, I also own. And that's one of my oldest holdings. I bought that originally back in 2014. It's been kind of a road. Yeah. It's been up and down and some bad years where the shares didn't go anywhere. And then a little bit of pressure here again during the pandemic on the shares, but now again, busting out to new highs. I also own some Amazon that I bought a couple of years ago as well. Not for the retail side, however. I did buy it for AWS because I love that aspect of the business, but I just happened to get the retail along with it. So yes, it's quite a list, and you want to be sure to subscribe to the Market Edge so you don't miss a single episode, because who knows what we're covering next. But you can get it on Apple Podcasts and we're on Spotify, but make sure you get us somewhere, and I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.